The day's market sentiment was primarily shaped by escalating geopolitical tensions. Reports of US and Iran exchanging fire near the Strait of Hormuz reignited regional instability concerns. Despite these headlines, WTI crude oil registered a modest decline to $105.23. This unexpected dip might reflect profit-taking or supply chain reassessments. Gold also saw a slight decrease, trading at $4,527.06. Meanwhile, corporate executives are warning of impending price increases. A prolonged energy shock could force companies to pass on costs to consumers. This narrative reinforces persistent inflation fears across the economy. Bond markets reacted with rising yields. The U.S. 10-year Treasury yield climbed to 4.45%, reflecting these heightened inflation expectations. This upward movement in yields signals investor concern about future monetary policy. Current CPI stands at $330.29, with the Fed rate at 3.64%. These figures underscore the ongoing challenge of managing price stability. Equity markets broadly retreated on this backdrop of geopolitical risk and inflation worries. The Dow Jones led declines, falling 1.13% to 48,941.9. The S&P 500 slipped 0.41%, closing at 7,207.5. The Nasdaq Composite also saw a modest dip, down 0.19% to 25,067.8. Among megacap technology names, performance was mixed. Apple and Alphabet saw declines of 1.22% and 0.63% respectively. Microsoft also traded marginally lower by 0.14%. Conversely, Amazon posted a gain of 1.35%, while Meta and Tesla advanced 0.27% and 0.43%. Nvidia remained largely flat. Sector performance was varied, with defensive plays perhaps showing resilience. The broader market appears to be in a risk-off posture. Volatility surged, as evidenced by the VIX index. It jumped 7.65% to 18.29, signaling increased investor apprehension. The US dollar index strengthened, rising 0.33% to 98.48. This dollar appreciation suggests safe haven demand amidst global uncertainty. The flight to safety indicates a preference for less risky assets. This sentiment often accompanies periods of geopolitical stress. Looking ahead, market participants will closely monitor developments in the Middle East. Any further escalation could introduce significant volatility. The ongoing inflation narrative and corporate guidance on pricing power remain critical. Upcoming economic data releases will also be scrutinized for insights into consumer behavior. Corporate earnings reports will provide further clarity on business resilience. Specifically, watch for any updates from companies like HSBC and Citigroup. Subscribe to the channel for daily macro market updates. Share your opinion in the